This is Joe Pratt. It's Wednesday, January 27th, 2021, and this is a podcast about our model portfolio, Namtai number 12 at alphavestcapital.com. I'm Joe Pratt. I'm the head of research at AlphaVest Capital. I can be reached at jhpratt at alphavestcapital.com. If you have any particular insights on Namtai that you'd like to discuss with me on the phone, first send your question to jhpratt at alphavestcapital.com, and then you can leave your phone number on there in that email, and I will call you back. Let me summarize the Namtai situation. There is a trial that starts this coming Friday in the British Virgin Islands. There is a dissident shareholder group headed by ISZO Capital. They filed a lawsuit October 19th, 2020. They've been granted this trial. To summarize their claim, they believe that Namtai is developing two projects on two pieces of land that were derived or originated when their contract manufacturing business started up in the 90s. It turned out these pieces of land are one's in downtown Shenzhen, the other one's a bit outside of downtown Shenzhen. They're both very valuable, and $300 or $400 million is being spent on developing about 8 buildings on each property. A third of the space in these buildings is residential. And what's happened in Shenzhen is that residential properties in particular have taken on a very high value. There was a Bloomberg article recently that indicated a small apartment of 500 to 700 square feet has a market value of approximately $900,000. And in these properties, there are approximately, there's space for 3,500 units. And what this all works out to is that the residential portion of these two properties, which is about 1/3 of the square footage, is worth approximately $40 a share. And the rest is going to be office space. The Dissonance feel as if the two buildings should be completed, and then the company should be put up for sale. They note that Blackstone, for example, has a very large real estate investment in China and would be a likely buyer of such finished projects, finished and either fully or partially leased up. However, Namtai is 25% owned by Kaisa, which is a very large China real estate investment trust, and Kaisa has a different vision of the future. They control the board, and the whole point of the suit in the British Virgin Islands is to have a special shareholders meeting because the dissidents believe they represent more than 51% of the stock. They'd like to change control of the board, put new members on, and basically complete the two real estate projects, each with 8 buildings approximately, and then sell it off. And they've put out a press release that indicates they've had 2 appraisals, one for $25 a share, one for $50 a share. They picked the midpoint at 40. The stock is currently selling for $6.85. It seems to me that also I'd like to note that there's very little debt on the balance sheet. Kaisa has gone off in the past year and spent approximately $150 million on buying up new undeveloped pieces of land, which they'd like to develop in the future. And this runs against the idea of completing the real estate and liquidating it. So hence, ISZO is seeking justice in the British Virgin Island court, which is the corporate domicile of Namtai. The trial starts in February. ISZO's indicated in a public release that they expect a judgment from the court before the end of February. It seems to me from all I've read that it's very likely they're going to win. The uncertainty is because this company has its operations in China, what's going to be the resolution? Is there definitely going to be a special shareholders meeting, let's say a month or two after this court judgment is given? Presumably at that time, the dissidents would put up their slate of board of directors, take control, But is that all going to work smoothly? So I would say just the way to think of this is Shenzhen is one of the most prosperous and valuable real estate cities on the globe. It's the technology center for China. China wants to make it the shining light of software and high-tech manufacturing in China. These two projects should undoubtedly be extremely valuable when finished and fully leased up. The current stock price is currently $685, and but the fundamental, I'd say the value is anywhere between $20 and $60. That's what this board fight is all about. We'll just have to see how this plays out. If this was a domesticated situation in the United States, it would seem to me that the stock would be much higher, because it's likely that the court will rule in favor of the dissonance, and the market would put a higher stock price on this equity. But given the fact that investors have to question whether or not the rule of law is going to prevail in China, that creates great risk in this situation. The most recent event that disturbed the dissonance was that a private placement was done at $9.15 a share which increased the shares outstanding by 20 million. It increased the shares outstanding by 50%. The company really didn't need the increase, and Kaisa and its insiders took all of this private placement. The company trades on the New York Stock Exchange, but its corporate rules are guided by British Virgin Island laws. The New York Stock Exchange says that a company cannot increase its shares outstanding by more than 20% without shareholder approval. In this case, Namtai's board put through this $170 million private placement without any kind of shareholder approval, and that was the act which led Izzo to file the suit in the British Virgin Island court. The trial starts on the 29th. Please, if you have any insights into this, please contact me. This is Joe Pratt. Thank you very much.